Friday, April 10th, 2020, Monaco 64, home of alternative economics and contrarian views. Good Friday to all of those who observe this holiday, of course. It's a beautiful day here in England today. I think we're going to have a great weekend as well in terms of the weather. Too bad they're keeping us from doing things around here with this lockdown. I don't think it's going to end on the 13th of April. They're going to keep us imprisoned in our homes for now. Today, though, I want to cover a few subjects. The most important one, though, is about the Federal Reserve and how I think the Federal Reserve is totally out of control. Thomas Jefferson, of course, once said, and I quote, "I believe that banking institutions are more dangerous to our liberties than standing armies." And he couldn't be more right about what's going on right now, not only in the US, but all around the world. And I think, unfortunately, the central bankers and the bankers, they actually control the armies as well. So it's a double whammy, unfortunately. And why do I say that about the Federal Reserve and the Bank of England? Well, you saw my video yesterday. Bank of England now is going to print money directly and give it to the UK Treasury. It's open-ended. They say it's not going to be divulged, the amount, but basically that means they can print as much as they want. And I think it's not just the fact that they're printing money and giving it directly to the government instead of the government borrowing it from the market. I think it shows that the government can't borrow anymore, that investors are losing faith and confidence in the, how can I say, credit worthiness of the government. And I think the same thing's starting to happen in the United States. We haven't seen the Fed give the money directly to the Treasury. They're still making them borrow through the national debt. But I would say that won't be too far behind as well for the US. But more interestingly, yesterday was the day that the Fed updates its balance sheet and publishes it. I look at it through the St. Louis Fed website, and I think that is now more important than any other statistic to keep track of. I think it came out around after 9 p.m. London, sometime between 9 p.m. London and 10 p.m. I was refreshing the page to see it change from last week. So I saw it right away. As you can see here, the Fed's gone really rogue, as I've said before. February 26th, balance sheet was at 4.1 trillion. Last week it was at 5.8, and now we're at almost 6.1 trillion. So this is getting really out of control. I saw another article today in the FT about what the Bank of England is doing, and they had like a comment from an analyst at a financial firm. But guess where he worked before? At the Bank of England. So when you read the mainstream or listen to the news, they're not going to give you an unbiased view of what's really happening. And I've always known this was going to happen, that they're going to go crazy and print money like there's no tomorrow, like Weimar like. And I'm not surprised, but it has arrived. I usually don't make statements like that, but it has arrived, and whoever keeps a hold of fiat currency that they don't need, of course, because we still need it to operate and pay bills, but whoever has a lot of those and keeps it in a bank or keeps those notes or fiat currency, I personally think they're making a big mistake. I'm not advising people to do anything, but I personally wouldn't. You need to try to get out, in my opinion, of paper money. It's going to become like the collector's item that we see nowadays from Zimbabwe or Weimar Germany, those banknotes that go into the millions or trillions. Of course, it hasn't gone into that yet, but I don't think we're far behind. And yeah, they can tell us that they can flip a switch and change things, like Ben Bernanke when he was asked on 60 Minutes about if inflation started picking up, what would they do? And he said, well, we can raise rates in 15 minutes and there's no problem. Or Janet Yellen, who said, unwinding our balance sheet or quantitative tightening won't be a problem. It will be like watching paint dry. How did that work out, Janet Yellen? And I heard the other day, it's outrageous. I heard Janet Yellen having a go at stock buybacks, and she was the one of the central bankers who basically encouraged that through zero rates. It's just amazing. It's as if a burglar was asked what was the best way to stop burglars coming into their house, and the burglar would say, "Yeah, it's outrageous that burglars are burgling, stealing people's properties and breaking into their houses." That's what Janet Yellen. That's the only analogy I can think of. The woman is like ridiculous. So yeah, this is happening. Fed's balance sheet, and yesterday, amazingly, the Fed announced another 2.2 trillion in loans now. I'm starting to lose track of all the trillions. Pretty soon is going to get into the quadrillions. It says here, the article from the Wall Street Journal, Federal Reserve is going farther than ever to shore up the U.S. economy. They're not shoring up the U.S. economy. They're bankrupting the U.S. economy. They're like diluting the value of everyone's wealth, especially those, of course, who keep their wealth in Federal Reserve notes and paper assets denominated in Federal Reserve notes, unveiling programs to lend directly to states, cities, mid-sized businesses that have seen revenues evaporate amid efforts to combat the novel C thing. The central bank also said Thursday it would expand previously announced plans to backstop lending to large companies by supporting riskier bonds issued by corporations that had recently lost their investment grade status. So these are the fallen angels. And I've spoken about the fallen angels months ago. I've been warning about the fallen angels. And here they are now bailing these companies out. Not only are they bailing these companies out, the fallen angels. And what are fallen angels? Well, they're companies that are right on the edge of becoming junk, from investment grade to junk. And I think there's about 3.5 trillion worth of bonds that are in danger of becoming fallen angels. In 2005, there's only about 600 billion. And you can bet Wall Street has written loads of derivatives on these things. So now you've got the Fed bailing these people out. And why is this outrageous? Well, because they're indirectly bailing out hedge funds, private equity firms who hold these things. What you need to understand, when a bond becomes junk, a lot of funds have to sell these bonds because their covenants don't allow for them holding junk bonds. So yeah, they're bailing out private equities. People who make billions of dollars every year. They've bailed out Millennium, Citadel, Bridgewater Associates. These are hedge funds. People who are worth billions. And I've got nothing against hedge funds or anyone who is successful. My problem is when the government or the central bank, and the central bank really, come in and rescue these people. I think that's totally outrageous. It's not free markets. It's not capitalism. But how do they get away with it? Well, they get so big that unless these people are bailed out, the whole system implodes. And there's only one way to stop this. It's to abolish the Federal Reserve system. The Federal Reserve System was passed as an act of Congress in 1913. It was signed into law by President Woodrow Wilson. So indirectly, the American people gave it consent. So it's up to the American people to withdraw the consent to the Federal Reserve. And if they don't, or the president passes an executive order abolishing it, he could. And if that doesn't happen, I'm afraid Thomas Jefferson will be proven right again about the fact that the American people will end up in debt to the bankers and will lose all their property and will basically be enslaved to these people. And I think that's what's happening now. The Federal Reserve is buying everything. They've become the market. And the same thing is happening in the UK with the Bank of England. And why do I focus on the Fed so much, even though I'm here in the UK? Well, because I think if Americans make a move, they'll lead by example. Bank of England was formed in 1694 by a royal charter. I'm not sure how it worked trying to abolish the Bank of England. But I would say if Americans abolished the Fed or ended the Fed, it would be much easier for people all around the world to follow the example. So there you go. They're even buying junk right now. And you can expect that balance sheet to get to 7 trillion very quickly. Who knows where it's going to go to? And it might be even not out of the realms of possibility that they stop publishing these numbers because of people like me. And the other thing I wanted to note, the national debt, U.S. national debt, public debt, is just gone over 24 trillion. It's moving very quickly. It's 24.1 trillion right now. Yeah, I know about the missing 20 trillion. That's a different story. But you can see the debt to GDP on the lower right-hand side of the national debt box there. It's at 111.42%. Up until recently, it was stuck around 106 a month or two ago. And now it's moving very quickly, and that's very worrying. And the other thing I advise you to do is to go forward on the debt clock to 2024. And this number is changing very quickly. I think the other day it was at 34 trillion. Now they're forecasting almost 36.2 trillion, but who knows where that could be in 2 weeks' time? 40 trillion. So what you need to understand about the monetary system is that the money that you think it's money that you carry in your wallet, the Federal Reserve note, is backed by this national debt. So it's the simple law of supply and demand. The more they create of this funny money, the more it becomes worth less or worthless. And a lot of people have been saying, oh, there won't be inflation or hyperinflation because the economies are slowing down. There's no one working. We've come to a halt. There will be no demand. But the law of supply demand is telling me that the money is going to become worth less and less because there's fewer and fewer goods out there because a lot of people have been furloughed or sacked. There's millions and millions of people unemployed. We saw yesterday jobless claims continue to rise. So there will come a point, because hyperinflation is basically not a cost push phenomena. It's actually the loss of confidence in the currency. And there'll be a point where we'll flip, the switch will flip, and people will want to get rid of that currency, that fiat currency, and they won't be able to. Well, they will be able to, but it will be a rush. They'll be trying to get anything that has any value. And that's when you get the hyperinflation. And I think we're very close to that. And I think that will be more dangerous than anything else, than any virus out there. It will kill millions, a hyperinflationary event, because it will basically destroy the currency that allows indirect exchange in a modern, specialized industrial society that we've had for like probably 150 years. Very few of us have a small farm and can survive in such a scenario. And that's why I say protect yourself financially at least. And this is the help that I can give. I'm not a prepper. If you want to learn about that, you need to watch another channel. But I'm trying to help you here financially with my opinions. And I've been at this for over 4 years on this channel, telling people to get out of the system, to try to get out of debt. I know it's hard, but it can be done. If I could do it, anyone can do it. Yeah, you just have to stop playing their game. You need to find a way, and it's never too late, I would say, to start. Now I wanted to look at an interesting story I saw in the FT article or story, whatever you want to call it. And this is worrying. This is especially for my US viewers. It's an opinion piece by John Dizzard. And he says, US is on course for a downward spiral of mortgage failures. Government policy could exacerbate an already tricky situation. And I was surprised by that because I thought they're going to bail out everything. The Fed's buying like mortgage-backed securities and everything else. But let's go through the article because I think this is very important for you to know. You're probably not seeing this in the news or in mainstream newspapers or anything else, I would say. This is what John Dizzard says. And I'm going to go through the article, the whole thing. I think it's important. And bear with me. For decades, most American homeowners could believe their house financing was safe. The mortgage company whose representative met them in their office in the local mall existed in a complex but predictable harmony with investors, other banks, and companies called servicers, which administer mortgage payments. Sometimes mortgage rates went down and homeowners could exchange their mortgage for a cheaper one, giving them a few extra dollars to spend with their kids on the weekend. The system is huge. The total assets of federally supported housing finance entities, Fannie Mae, $3.5 trillion, Freddie Mac, $2.2 trillion, and Ginnie Mae, $2 trillion, are close to the total government debt of France, Germany, and Italy. If the services are not working properly, the paperwork on that is not being sent to the right place every month, the cash is not being routed to the holders of securitized bonds, and the system would be in chaos. Americans, as homeowners, workers, and voters, were told last month that everything could go back to normal, that they could use their bailout money to live while locked down. American politicians know the voter job, a House deal, is the one they must continue to deliver whatever viruses or financial shocks come along. Thanks to the bureaucratic and market momentum, as much as congressional action, U.S. housing sales and finance are stumbling. But getting through April, it looks as though significant parts of the system worth tens or hundreds of billions of dollars will crash in May. So this is the interesting part and worrying part, I would say. And just going back to what some viewers have said in the past about borrowing money for a mortgage to buy a house. They've said, well, interest rates are so low, it's silly not to borrow. And I've always said, well, I'm not comfortable with being beholden to these people. And if you can have your property or own your house outright, do it. Don't take a mortgage. A lot of people have asked me as well, should I borrow money to buy gold? No, try to stay out of debt because of this. I know it's a black swan, but it can happen. Let's continue. There was supposed to be a deal in place, admittedly not one that was well thought through, to keep housing finance ticking over. Unfortunately, there is one man, an officious regulator named Mark Calabria, the head of the Federal Housing Finance Agency, who has decided the simple fix to the financial problem by the sea pause should not be simple. Despite the industry's plea, Calabria will not arrange for Fannie and Freddie or the Fed to make secured bridge loans to the services, which keep track of the documents, mail the accounts to the borrowers, and the checks to the bondholders who own the mortgages. For its part, Ginnie Mae, directly owned by the government, has agreed to lend Cress's money to services, which make Calabria's inaction even harder to understand. According to Calabria, the payments shortfall for the services caused by congressionally mandated loan forbearance is all spin. The mortgage bankers who generate the most U.S. mortgages are extremely angry with him. For the moment, Calabria has the support, and listen to this, of Treasury Secretary Steve Mnuchin. Apparently, Calabria has decided that there has to be a stress test for the services this May, and perhaps a few months after that. This works only if it is possible to take live mortgages out of distressed services and transfer their work and liabilities to some new bank or servicers which can perform the same function, ideally without their borrowers triggering high-cost special servicing that goes to the financially stretched. Few, if any, people in the mortgage industry believe that that is possible come May or June. They believe there could be a downward spiral of mortgage failures, screwed up documentation, delayed payments, and another pro-cyclical acceleration into the hole of depression. Before the pause, driven by the C virus and the relief efforts, Mr. Calabria and Mr. Mnuchin had been vigorously pushing a plan to take Fannie Mae and Freddie Mac out of the government's protection. They were putting in place something called administrative recap release to the capital markets. Incidentally, friends of the Trump administration, who controlled a bit over $33 billion in junior preferred stocks, would make some speculative profits. A long list of Republican and Democratic senators who the administration needs for the next stimulus bill just circulated a letter that is hostile to Calabria's plan. This is a funny comment here by this guy, Dizzard, at the end. He says, Calabria makes an unlikely villain, but he has become one in the world of housing finance. At this rate, he will do well to collect a fat severance payment at the end of May. For his safety, Congress may have to throw in anonymity through the Witness Protection Program and maybe a job under his new name. Perhaps teaching slide deck composition at a for-profit online college. So there you go. I think that's quite serious. The fact that the housing market could be in trouble as of May and going into June because of this story. I'm not going to put a link to the story in the description because if you don't subscribe to the FT, it's no point. But what you can do is just pause my video and read through the screenshot. I think this is very serious, especially if they keep this lockdown going longer and longer. And it looks like they're going to do this in the UK. And I wouldn't put it past them to do the same in the US. So, yeah, that's it. So, what's my take from this past week? Well, the central bankers are going mad. They've lost control. They've gone rogue. Whatever you want to call it, I think unless something happens to neuter the power of central banks or to even get rid of central banks, the future for us, our children and grandchildren is not going to be a good one. They're going to be under debt servitude. And there's only one way for individuals to try to stay out of this system as much as possible. And I think that's self-reliance, not getting into debt, trying to protect yourself, your health, your finances, spiritually as well. Of course, I don't cover that here, but there's a lot of other people who do. Yeah, so that's what the world looks like to me. Is it all bad? No, I don't think so, because you always have to look at things on the bright side. And if you know what's happening, there's the old saying that the truth will set you free. Hopefully, a lot of you are on that path. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. You can also follow me on Twitter, Facebook, Steemit, BitChute, and DTube. I wish you all a great Easter weekend. Take care. Bye.